This is Gray Ellis here, your go-to realtor, Virginia Beach, serving all of Hampton Roads at Remax Alliance. And I'm sitting here today with my favorite loan officer, Sophia Ellis from VA Mortgage Corp. And today we're embarking on a mini-series where we're going to talk about emerging market trends, interest rates, investment opportunities, and things of that nature. Today's topic, we're just going to run through some very basic buyer questions for the new buyer. And luckily we have an expert here to give us some answers. So let's go ahead and dive in. Sophia, how does a buyer know how much they can afford?
So we're going to look at three main things. It's going to be your income, credit score, and then the debt to income ratio. I analyze all of that and see where that new mortgage payment is going to fit in your debt to income ratio, which correlates to the purchase price that you qualify for. We go over that, and then we take that pre-qualification letter and give it to your agent, start shopping, and that's how you know how much you can afford.
That's right. And that pre-qualification letter, that's like the first step in the buying process. Any offer that we submit, that pre-qual letter is going to be attached. And that way the seller and the listing agent knows that you guys have been properly vetted and have a legit offer coming. So Sophia, what loan types are there out there, and how does a buyer know which one is the right type for them?
Good question. So there are a couple different loan programs, the main ones being FHA, VA, conventional, and USDA. They all have their different unique benefits. For example, VA is for veterans. It's a zero down payment program. FHA is for sometimes lower credit scores, or if you need a little bit of a flexible debt to income ratio. But I analyze all of those different qualities and see what's going to be the best fit for you. And then we go over that as well, all the pros and cons and which one is going to be your best choice.
Okay, Sophia, let's talk about closing costs. How much should a buyer know to budget for the closing costs?
It's a big one. So closing costs typically range about 3% of the purchase price. So if you're looking at a $300,000 home, you're going to be looking at about $9,000 in closing costs. This covers things like the appraisal fee, title insurance, your loan origination fees, and then setting up your escrow account for taxes and insurance. So I typically give an estimate pretty upfront when you get pre-qualified. That way there are no surprises. You know what to expect at the closing table. And sometimes you could even, talk to your agent and see if they could negotiate with the seller to get some closing cost assistance.
That's right, guys. It's not as much as a seller's market as it has been in the last couple of years. We're in a bit of a retention. So basically, depending on the location of the home and the time on market, there's definitely some opportunities there for me to get you some closing cost assistance as a buyer.
Yep. So we know home buying can be a little bit overwhelming, especially if you're a first-time home buyer. If you have any other questions, please reach out to us. We are available. DM, text.
Yep. And thanks for watching our video, and we'll see you next time.